is myself, Dr. Shelly Oberoi. I'm an assistant professor in Narsi Munjay University. Today we are going to cover the topics which are from the course code BCOC 136, and I'm going to cover the topic aggregation of income and clubbing of income. I'm going to discuss both the topics in two parts, part A and part B. Part A will cover the aggregation of income, and in this we will be discussing what are the different incomes which are being included in the assessee's income and how they are aggregated. We will be mentioning the incomes which are being aggregated and their aggregation. So to start with, there are certain cases in which some amounts are there which are deemed as income in the hands of the assessee, although they are not actually not in the nature of income. All these such amounts and incomes are covered in various sections, that is section 68, 69, 69A, 69B, 69C and 69D. We are going to discuss all these sections in the coming slides. And sometimes when the assessing officer will ask for few important explanation from the assessee as far as, and it is the responsibility of the assessee to furnish the explanation in certain cases, that is in certain kind of incomes. And if the assessee is not able to provide and offer the explanation to the assessing officer, or if the assessing officer is not satisfied, then such amount referred to in all these above mentioned sections would be deemed to be the income of the assessee, and all these incomes would be aggregated in the assessee's income. So after discussing the meaning of the aggregation income and the deemed income, what are the various sections which cover all these details, we will be discussing what all topics we are going to discuss in the aggregated income and what are things and the incomes are included in the aggregated income of the assessee. So 4 things are being included in the aggregated income. First is the income of the assessee, second is the deemed income, then the clubbing of income, and last is the share of a member in the income of A, association of person, AOP, or the body of individual, BOI. Then before we will start, we'll try to understand what actually the deemed income is, and sometimes normally every assessee is able to pay income tax on his own income, but there are certain kind of incomes or amounts which are not the income of the assessee, even if they are deemed to be the income of the assessee under the various provisions of the Income Tax Act. Such incomes are added to the income of the assessee and are called deemed income. And all these deemed incomes we are going to discuss in the coming slides now. First is we are going to discuss the various deemed income and what all deemed incomes are. We are going to discuss the various types. First is the cash credit, which comes under section 68. Then we have unexplained investment, which is covered under section 69. Then we have unexplained money, etc., which is covered under section 69A. Then we have investment amount, etc., not fully disclosed in the books of accounts, which is covered under section 69B. Then we have unexplained expenditure, etc., which is covered under section 69C. Then we have amount borrowed or repaid in Hyundai, which is covered under section 69D, and taxation of deemed incomes. Then we are going to discuss. So one by one, before we will be discussing all the different kinds of deemed income. So to start with, we will be starting with the cash credit, which I told you already that it is covered under section 68. Any amount which is credited in the books of accounts of the assessee in the previous year and for which the assessee is not able to provide the satisfactory explanation to the assessing officer regarding the nature of such credit or the source of such credit to the assessing officer, then such credited amount may be added to the income of the assessee and tax may be charged on such kind of cash credit. Like for example, share application money, share capital, security premium reserves, etc. If found credited in the accounts of closely held company, then also it will be deemed to be considered as a deemed unexplained income unless it is explained to the satisfaction of the assessing officer by the resident person in whose name such credit is recorded in the books of such company. If such explanation is not being satisfactory to the assessing officer, the amount so credited to the income of the company shall be deemed to be the income in whose account such amount was found credited. This is to be noted that this provision is not applicable if the sum is recorded in the name of the venture capital fund or the venture capital company. The unexplained income shall be taxable at the rate of 60%, plus also the surcharge is being applicable. If it is applicable, it has to be charged on that. And also the HEC has to be charged, which is at the rate of 4%. Health and education cess. HEC is that. Then the second kind of deemed income is the unexplained investment, and which is covered under section 69. And if in the relevant previous year the assessee has made any kind of investment which is not recorded in his books of accounts, and if any maintained by him for any source of income, the assessee offers no explanation about the nature and the source of money invested, or the explanation offered by him is not satisfactory in the opinion of the assessing officer, then the value of such kind of investment may be deemed to be the income of the assessee for such previous year, and on such kind of unexplained investment which is considered to be the deemed income, and the tax will be imposed on such kind of income, and the assessee is liable to pay tax on such kind of unexplained income. So this is the second kind of deemed income. Then we have the unexplained money, etc., which is covered under section 69A. Like if the assessee is found to be the owner of any kind of money, bullion, jewelry or any valuable article which is not recorded in the books of account in any of the financial year, which is being maintained by him for any source of income, and the assessee is not able to provide any kind of satisfactory explanation to the assessing officer about the nature of such kind of acquisition of money, bullion, jewelry and other valuable articles, or the source of any kind of such money, bullion, jewelry and other valuable articles, or the explanation which is being offered by him is not in the opinion of the assessing officer is satisfactory, then the money and the value of such bullion, jewelry or other valuable articles may be considered to be the deemed income of the assessee for such financial year, and again that would be included, such kind of unexplained money or the value of such kind of money would be included in the income of the assessee, and tax will be imposed on such kind of unexplained money, and all these are covered under section 69A as I already told you. Then we have the next kind of deemed income, which is the investment amount, etc., not fully disclosed in the books of accounts. This is covered under section 69B. And suppose again if the assessee has made any kind of investment or found to be the owner of any bullion, jewelry or other valuable articles, and the assessing officer finds that the amount expended on making such kind of investment or in acquiring such bullion, jewelry or other valuable articles exceeds the amount recorded in this behalf in the books of accounts being maintained by the assessee for any source of income, and the assessee is not able to offer any kind of explanation about such excess amount, or the explanation offered by him is not in the opinion of the assessing officer is satisfactory in any financial year, then the excess amount may be deemed to be considered as the income of the assessee for such financial year in which the investment has been taken, and the assessee is being found to be the owner of the investment, and such income will be included in the total income of the assessee again, and tax will be imposed on such kind of income as per the applicable rates. So such kind of investment which is not fully disclosed in the books of accounts by the assessee is considered to be the deemed income of the assessee. Then the next kind of deemed income, the next type of deemed income is the unexplained expenditure, which is covered under section 69C. Suppose in any financial year the assessee has incurred any kind of expenditure, and assessee is not able to again give any kind of satisfactory explanation about the source of money for such expenditure, from where the assessee has got the money for doing such kind of expenditure or part thereof, then such kind of expenditure is deemed to be the income for that financial year, and that income or that money which is being used for the expenditure purpose would be added in the total income of the assessee, and again the tax will be imposed as per the applicable rates. Such kind of unexplained expenditure which is deemed to be the income of the assessee will not allow any kind of deduction under any head of the income. So under this kind of deemed income, the important thing which the learners have to keep in mind is that if the assessee is making any kind of unexplained expenditure, then the assessee is not going to get any kind of deduction. Any kind of deduction is not allowed under any head of the income. So the assessee has to keep in mind that he has to make sure that any kind of expenditure which he or she is making, they should know from where, they should disclose actually from where they have got the money which they are going to spend on such kind of expenditure, what is the source of money, from where they have got that particular cash or any kind of in kind which they are using for such kind of expenditure. If the expenditure is unexplained, he is liable to pay tax on such kind of expenditure and tax will be imposed on that. Then the next kind of deemed income is the amount borrowed or repaid on hundi, which is covered under section 69D. Any kind of amount which is being borrowed by assessee on hundis and its repayment must be made by the account paid check, then otherwise amount of such borrowing or amount repaid shall be treated as the income of the person borrowing or repaying the amount for the previous year in which such transaction is made. Repayment of the amount shall include the amount of interest also on the amount borrowed. It means that if any kind of amount has been borrowed by the assessee on hundi, in the case of repayment, it means at the time of the repayment, the amount of interest the assessee has to pay along with the principal amount, and that has to be included while paying off the such kind of borrowed amount. And the main thing which is to be noted here is that if any amount borrowed on a hundi and which has been deemed as income, it shall not be deemed as income again when such income is repaid. It means any kind of amount which is borrowed by the assessee on hundi, that at that time that will be considered as deemed income. But again when the assessee is repaying that amount, again we will not consider it as deemed income. Then the next kind of deemed income, the types of deemed incomes are almost over, so which we have covered. So all the incomes which are falling under section 68, 69, 69A, 69B, 69C, 69D are considered as deemed income, and on all these income a tax rate would be applicable at the rate 30% plus surcharge and the cess if they are applicable. So, and one more thing which the learners have to keep in mind is no deduction in respect of any expenditure or allowance or set off of any loss shall be allowed to the assessee in computing deemed income. So here the learners have to keep in mind is whenever we will be dealing with the deemed income, no set off of any loss is allowed, and set off and carry forward of losses which we will be covering in the coming sessions. So this thing you have to keep in mind that in case of deemed income, no deduction in respect of any expenditure or allowance and the set off of any loss shall be allowed to the assessee in computing deemed income. So all these cases are being discussed under the deemed income. So deemed income is a part of the aggregation of income. So how the income which is not being actually the income of the assessee, but in case the assessee is not able to disclose the source of the income and the nature of the income, in that case, and the assessee is not able to provide any kind of satisfactory information which the assessing officer is seeking, in that case all those types of income will be considered as deemed income. So this was the part A which we have covered, and in the second part we will be covering the clubbing of income.